Hi, my name is Tess Severin Butler, and I'm one of the portfolio managers at Severin Investments. My firm specializes in managing SMAs, or separately managed accounts. These are portfolios of individual securities, and I'm here today to talk to you about a couple of benefits of using an SMA portfolio. The first benefit I wanted to discuss was transparency. Investors who use an SMA see all of the stocks that they own, all of the securities that they own on their statements or when they look at their online portal. And this helps them feel more connected to their portfolio. It's a huge psychological benefit. I've actually had clients tell me that when the market's down, they're really not concerned because they see what they own, they see that it's good quality companies that they recognize for the most part, and they feel really confident as owners of those companies that they're going to make it through and they have great long-term potential. And so having an SMA portfolio helps investors stick with their portfolios, not just stick with them, but confidently through market downturns, which we know is a really important aspect of investing for the long term. The second benefit that I wanted to discuss is efficient diversification. I can actually more efficiently diversify an SMA than I can a portfolio of mutual funds and ETFs. And that's because if I'm using individual securities, I can target specific asset classes and specific industries and sectors in a way that is really difficult to do with a portfolio of funds. A lot of times in funds that are asset class based or even sector weighted, you get a lot of overlap into maybe some securities that you don't expect to be in there. There's a lot of times where large cap value and large cap growth funds have overlapping securities. And if you actually look at the iShares Consumer Discretionary Fund, a really great fund by the way, it has a lot of industrials and consumer staples and communication services, stocks that don't really go in the consumer discretionary sector. And then if you look at the iShares Small Cap Fund, you see a lot of mid-cap stocks in it actually, not just small cap. And so if you're using individual securities, you can pick the stocks that actually belong in the sector when you're weighting your portfolio, and you can more accurately weight the portfolio. In a mutual fund portfolio, I'm just not always confident that I've got the asset allocation or the sector weightings that I'm expecting. In a stock portfolio, I can achieve that and much more efficiently diversify the portfolio. This is really important because, as we know, risk and return go hand in hand. And we want to maximize the amount of return we're getting for the amount of risk we take in the portfolio. Our portfolios that are made up of individual securities versus their ETF counterparts that we also manage have higher Sharpe ratios and higher average returns because we're able to achieve this more efficient diversification. Thank you so much for your time watching this video. I'd love to hear your comments or your questions, so please include them below. Thank you.